Hi, this is James Shugg at Westpac with our end of market day report for Thursday, March the 8th. Well, the late rally that we saw in European equities yesterday on increased speculation that the Greek bond swap would go ahead later this week continued today, and we saw very positive sentiment right throughout the London session. As it became increasingly apparent or likely that the swap would go ahead, with about 60% on last count, 60% of bondholders currently said to be prepared to accept the swap. Now, to force the collective action clause, Greece needs to get 2/3 of the bonds of bondholders. Two-thirds of the bonds, the holders of 2/3 of the bonds, to agree to the swap, and that then gives them the right to push through the swap on all the private creditors. Now, so they're just shy of that target at the moment. 10 p.m. Athens time, which is 8 p.m. London or 7 a.m. Sydney, is the cut-off date, the cut-off time for that. So we'll have a better idea by tomorrow, or later tonight at least, in terms of what actually is going to transpire with regards to that swap. The other news today on the economic side of things was okay. We saw a decent rise in industrial production in Germany in the month of January, and in the US we saw a modest rise, 8,000 rise in initial jobless claims. That's the third consecutive week that they've pushed a little bit higher, but they're still holding just above the 350,000 a week area, which is consistent with a real improvement in the labour market compared to where we were running up until late last year. So not so good on the week, but the underlying trend is still pretty favourable in those claims numbers. The other news today was Bank of Canada on hold, a slight upgrade to their growth view and inflation view, but not enough to justify or to suggest an imminent policy tightening from them. Bank of England on hold as well, no statement. European Central Bank also on hold. The ECB President published the new 3-monthly forecasts, the staff economic projections, and they included a downgrade, as we suggested yesterday, to their 2012 growth view from plus 0.3% to minus 0.1%. That's the midpoint of the range of forecasts that they publish. Their inflation view for next year, which is what's really relevant for the monetary policy horizon, was a slight upgrade from 1.5 to 1.6%, but still, comfortably within the definition of price stability, which is close to but below 2% that the ECB runs. So the President also said that at both the February and the March meetings there was actually no discussion of interest rates, i.e. they feel comfortable enough with the outlook and the current policy setting not to even talk about shifting interest rates at this stage. So our view, though, is that over the next few months we're going to see a deterioration in the economic outlook in Europe as it becomes clear that the Greek bailout, the latest iteration thereof, won't be sufficient. The Portuguese bailout's going to run dry as well, and also we've already started to see evidence that Spain earlier this week was looking at reneging on their budget deficit reduction targets. So we're going to see renewed concerns about the sovereigns in Europe later this year, and that's going to hit confidence in governments, in economies, and in the banking sector again. So likely to see or require another round of easing from the ECB. But there's certainly no signal in that direction yet from the ECB. So that's about it in terms of the news today. In terms of market movements, at the close, the London market up 1.2%, the French market up 2.5%, and the German market up 2.5% today as well. Spain up 1.8% and Italy up 1.6%. And about 5 p.m. London, looking at a 0.4% gain on the Dow. The level of the Dow is 12,891. On the commodity markets, further gains on top of yesterday's move higher. Let's see, we've got copper prices up 0.5%, oil up 0.6%, $106.83 a barrel, and $1,696 an ounce for gold. That's an increase of 0.75%. The Aussie dollar is at 1.061 against the US dollar. It did actually rise to as high as 1.067 earlier in the London session, but it's pulled back a little bit since then. The Aussie jobs numbers last night were in line with our forecast, 15,000 decline, 5.2% unemployment rate. That's consistent with our view that we're going to see the labour market deteriorate enough to justify further policy easing from the Reserve Bank within the next few months. Tonight London time, today Australian time, it's the Aussie trade figures for January. We're looking at exports down substantially more than imports. The higher Aussie dollar is a factor at play there, but also the rain hit the coal exports, and that's another factor sort of pulling down the size of the surplus. So we're looking for a 300 million surplus in January, down from well above $1 billion in the previous month, in late 2011. And that's about it for today. So back tomorrow, where the big news of the day, apart from the Greek story, the ongoing Greek saga, will be the monthly official jobs report out of the US. We're looking for a 180,000 increase in payrolls. Okay, that's it for now. I'll be back tomorrow.